And the big headline in this edition of ET Now Startup Central is the biggest deal that's happened in the food tech space this year. We're talking about an $80 million funding round for Swiggy. Now, this is its Series E round of funding, a round led by Naspers. Now, remember, highlighting this deal is important because it's coming at a time when deals have been far and few in between, especially the Series E kind of range just not happening because people are too busy working on their existing portfolio companies, consolidation among the bigger companies. And remember, this is also coming after a very difficult year for food tech. We had many food ordering apps shut down last year, but perhaps this signals the first signs of a turnaround. To really find out if this is a one-off, if the food tech space is indeed out of the woods, we have two special guests joining us on the show. Harsha Majeti, the co-founder and CEO of Swiggy, joins us for an exclusive interview to really take us through all the details of this deal. We also have Sumer Juneja, partner at Norwest Venture Partners, an investor and board member of Swiggy, joining us live from Mumbai as well. Thanks so much, both of you, for taking our time. Harsha, I'm going to start with you first. $80 million in an environment like this, that too in food tech. You know, how difficult was it for you to swing this round? Did it take longer than anticipated?
Yes, it has been a very delightful outcome for us with a large and very long-term investor like Naspers coming on board. As for the reasons behind the investment, in their own words, they've seen the company's execution over the last 18 months, and we'd also discussed the company's plans, growth targets, movements in margin profile, etc. While meeting them previously and having tracked the company for a while. They were on board with the idea that our execution was something that they were pretty happy with. So, bunch of reasons, very strong growth and significant improvements in the margin profile. And now they have full conviction in the business model that we operate in. And a bunch of these outcomes led us to closing the round. And the other thing is our customers repeat at the highest in industry standards in internet services today, and that is something that we pride ourselves on, and we continue to work on improving every year.
Right. Before I take it to Sumer, Harsha, one more question for you. In terms of the investment going forward, the statement talks about broad investments in technology and data and machine learning. A lot of terms thrown in there, but give us some specifics on where this money is going to go to in the next few months.
We might also explore expanding into cities, but we will take that decision in the next few months sometime. We haven't committed to any of these yet. But the majority of the focus will be on doing a lot more for the users that we serve already, and also the users in the cities that we're in already. And the investments that we're trying to make, even if it is in technology, data science, the teams that we're building there, as well as the new product and service offerings. The majority of the people who are ripe for consumption of a service like Swiggy remain in the urban markets. And our focus and priorities will always be on innovating a lot more for these users, for more use cases, than necessarily prioritizing geographic expansion.
Sumer, give us the investor perspective on this. I mean, I think Norwest was one of the earliest investors in Swiggy. Getting in a big strategic name like Naspers in Series E, are you feeling relieved more than anything else at this point?
No, I think, look, we've been relieved, honestly, since we've been in Swiggy. Hats off to Harsha and the team. It's been on the ground, every day, pure execution. I think these guys in Swiggy have done a fantastic job in balancing growth and unit economics. We haven't let go of the market. We've given a product which is extremely reliable, which people use, 8 to 9 times, even more in a month. And at the same time, they've balanced unit economics. They've proven that the model works, especially in the mature cities, and have been very disciplined with burn. So I think when you put a couple of things together, obviously great team, massive market, immense user repeat, and on top of that, showing unit economics and financial discipline. We've always been reasonably confident that these guys, when we want, the funds will be available. I think it's a matter of how much time will it take and at what value. But I think where we are and where Swiggy is and how they've executed, I think there was always going to be someone there, wanting to back the company.
Right. Harsha, let me get your thoughts on this. Sumer spoke about how your execution and, how you balanced it out with growth sort of helped you. But, what is your own assessment on what really worked for Swiggy and what didn't? Because food tech is notorious for the high burn rates and also, the low unit economics, at least here in India. So what really worked for you that didn't for the others?
So here's the thing there. I think one will have to compromise revenues or commissions or what you can charge the consumer if your product is not excellent. I think just by focusing singularly on the customer experience, it's meant that we've not had to build any dependence on subsidies or discounts on the consumer side. And either also on the restaurant side, by just doing a good job and getting them new business and delivering it efficiently, we've been able to get a fair value for the service that we offer them and not have to offer any subsidies. So I think it's just sticking to the basics and doing a really good job at what you sign up to doing. And that's when you don't have to grow or maintain business through inorganic means. And that is, on the revenue side. And on the cost side, it's just a massive investment in technology and also a function of the densities that we're now able to build. Both of these together have been able to help us save off the delivery costs by up to 35% in the last year. So it's a really hard business, and the team is executing super hard and super nicely to make this happen.
Sumer, I'm sure you're happy to hear that the team continues to execute superbly. But, Sumer, is this a larger sign of, the food tech space finally coming out of the woods, so to speak? Because last month you had Zomato announcing in a blog about how they've, cut down burn rates big time, how revenues have grown. I mean, they almost engineered a turnaround from where they were, say, a year back. So now with Swiggy also, showing conviction with the kind of investment that it's got, is this a larger sign of a revival in the food tech space?
So, look, food in India is going to be big, right? If you look at the consumer wallet, 70% of consumer wallet today gets spent on food. A lot of that will be groceries, but a lot of that will also be food to go out and eat. That's one. Second is, as we become, as a country, as we become richer, as we want to go out, the first thing people do is they want to go out and eat, or they want to order in and kind of try different cuisines. So the demand is massive. I think like many industries, there was a lot of excitement, a lot of people poured in. I think some people executed better than others, some people have better unit economics, and I think the people who survive will definitely be very well placed to take part of this massive opportunity, because I know at Swiggy, for example, we barely touched the surface. We can easily grow 30, 40, 50x from here without a problem. And I think whether it be us or whether it be the other players, if your unit economics, and like Harsha said, every day solid execution is there, I think there are big companies to be created.
Right. Harsha, Sumer spoke about unit economics. Talking about unit economics, will owning kitchens, owning the inventory part be the way going forward if you want to improve margins and, improve unit economics? Is that something that you will look at all, something that you are already working on?
So the correct answer for that will be we will not shy away from doing anything that will deliver better experience to consumers. And for that reason, this remains an area of interest for us, and we run experiments on the side to understand how this model can operate and how we can make it a win-win for all stakeholders.
Right. Harsha, I also want to ask you the same thing that I asked Sumer. I mean, is this a sign that the worst is over as far as food tech is concerned? After all the shutdowns we saw last year, the layoffs that we saw last year, should people be more optimistic after this deal?
The worst is over for the space. Yes, I think there used to be a lot more irrational behavior when it was even earlier and even more competitive. Competition is going to hang around in this space because we firmly believe that this is going to be one of the largest categories in the internet space that will emerge in India based on the consumption patterns we see. So, new and larger players can appear, will appear. And, in terms of the worst being over, as you can see, we are the last food delivery company to be set up that still exists today. So I think there is a lot more rationalization in the behavior exhibited by players. That is what you mean. Yes, there has been an early consolidation, but I continue to believe that this is the beginning of the space still.
Sumer, has this encouraged you to look at more investments, in the hyperlocal space that sort of became a bad buzzword last year? But, have things sort of stabilized now? Have people got the model right? Will hyperlocal look up again?
No, for sure. Look, I think, it's whether it's hyperlocal or not. I think we are all looking for teams who can execute on the ground. What we like about models like Swiggy, even though normally average order values in India are lower than obviously what you see in the West, but what you do need models like hyperlocal models is the repeats are very, very high. So your CAC to LTV kind of makes sense. So, if you find a hyperlocal model which lets you have high repeat, which lets you amortize the cost over more and more orders, the unit economics start making sense, and as the density increases, the unit economics look even better. So definitely there's no, there are players who've done well in hyperlocal, and I think if they have the high repeat and if they have good execution skills, there's definitely a business to be made.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.